heart of where innovation, money, and power collide in Silicon Valley and beyond. This is Bloomberg Technology with Caroline Hyde and Ed Ludlow.
I'm Caroline Hyde at Bloomberg's World Headquarters in New York.
And I'm Ed Ludlow in San Francisco. This is Bloomberg Technology.
Coming up, a changing of the guard over at Twitter. Elon Musk announces he's stepping aside as CEO. We'll bring you the details on this successor.
Plus, we'll talk artificial intelligence and how companies are implementing guardrails to deliver and embed AI responsibly.
And SoftBank has begun testing investor appetite for the IPO of ARM, seeking as much as $10 billion. We'll bring you that and so much more this hour as we look at what market sentiment is like to round out this week. Pretty dire, really collapsing on the 10 a.m. mark here in the United States as we get the University of Michigan sentiment from the consumer right now that still sees inflation at about 3% for the next 5 to 10 years. That inflationary pressure still pushing down, therefore, on the tech stocks on the day. We're seeing the two-year yield actually rise some 9 basis points. How much is the Federal Reserve going to have to tackle that embedded view of the consumer, where inflation is heading? Of course, we've also got anxiety about a debt ceiling, about the banking system. Plenty still to chew on as we head towards the weekend. Interesting moves in the emerging markets as well. Keep an eye on Turkey, which looks pretty buoyant from the banking system there as they look towards a key vote. Could Erdogan be waved goodbye to this weekend? And also, look at South Africa. We've got the rand really collapsing on the day as we see concerns about the relationship between South Africa and the US, all to do with Russia's supply of arms. Let's pick it on again because I want to look at what's happening in terms of crypto. And dollar has had a real rally this week on the back of some of these inflationary concerns and the slowdown in the overall jobs data as well. We're seeing Bitcoin off by 9% on the course of the week. Ed, quite a sell-off. In fact, the first back-to-back weekly loss of Bitcoin since back in March. But dive into some of the micro movers in stocks today.
Yeah, look, it's a kind of markets day where there's a lack of news headlines, particularly in the technology sector. I look at some of the mega caps. Actually, one mover to the upside is Alphabet, the parent of Google, up by 0.6%. You see some of its mega cap peers moving to the downside, dragging down the NASDAQ 100 as an example. For Alphabet, actually on track for its best week since mid-March. I think there's a lot of momentum in this name from all the news we got from them at Google I.O. around what they're actually doing in AI. This show, Bloomberg Technology today, is going to have a big AI theme, but we're not seeing sort of news-driven moves in the markets apart from Tesla. Let's take a look at this stock. It's interesting. Had been higher at the open, markedly higher, up by a couple of percentage points. We're now softer by 1.4%. Three factors in the market. One, the principal one, being we do have a new CEO at Twitter, Linda Yaccarino. We will get into that momentarily. Also news elsewhere that they've raised prices incrementally on the Model Y in the US, $250, and on some of the more expensive models like Model Y, more expensive models like the Model S having a $1,000 price bump. In China, there is a soft recall for a software fix on regenerative braking, 1.1 million units or so. A lot happening, but we're down 1.5% on Tesla. I think a lot of this has the markets passing what's happening at Twitter, Elon Musk's other company.
Yeah, let's dig into that, of course, because he is announcing, he said it last night, in fact, stepping back as Twitter's CEO in the next coming weeks. And reports now name NBC ad chief Linda Yaccarino as his successor. For more, let's bring in Bloomberg's Asia Counts. Interestingly, Comcast down a little bit on the news that they're losing this ad chief over at NBC Universal. But we do see, finally, someone who gets advertising being paired with someone who gets the technology.
Yeah, it's huge, right? Twitter's advertising revenue has declined about 50%, maybe more, since Musk took over. He's really alienated a lot of advertisers with some of his erratic decision-making and things like getting into a spat with the ex-employee who was disabled and making comments that were perceived by some to be sexist against women. And all these sorts of things have really driven advertisers away. So bringing in someone like Linda, who has such deep experience in the advertising industry, has those relationships, has an amazing reputation, like that could be huge for Twitter and really rebuilding trust with advertisers.
Caroline, Asia, Elon Musk has tweeted in the last 15 minutes. Let's bring that up and show our audience. He says, I am excited to welcome Linda Yaccarino as the new CEO of Twitter. So there you have it, official confirmation. He tags Linda Yaccarino and says that she'll focus primarily on business operations while he focuses on product design, new technology. Looking forward to working with Linda to transform this platform into X, the everything app. that is the kind of key part, right? That this is one step to a bigger project, Aisha.
Yeah, Musk has talked a lot about this idea of having an everything app, right? Modeling on something like WeChat in China, where you can book events and tickets and pay for things. So he's talked a lot about that. And so it'll be interesting to see if he's actually able to execute on the idea. And then we know, right, a number of weeks ago, he put Twitter underneath this holding company called X, right? So technically Twitter Inc. doesn't exist, but it's underneath this company called X, and is part of his vision to sort of make Twitter an app that can do everything.
I've got to sort of reflect on overall the messiness of all of this, though, Aisha, because if we reflect on what's just happened to Comcast's NBC Universal, they're about to go to their advertising community. They're about to have their upfronts. They're about to be pitching how you should be lining up your advertising against some of their online offerings, and particularly on Peacock. And the main woman to do that has just exited stage left in quite a sort of erratic manner. It can't be a great end to that part of her career and start of the next one.
Yeah, it has to be difficult, right? She was really integral to NBC efforts like Peacock, which is, their ad-supported streaming service, to even establishing partnerships and relationships with some of the tech companies, including Twitter, Snapchat, YouTube, and others. And then even huge events like the Super Bowl and the Olympic Games. So she had a really, really important role at NBCU. And so I can imagine it's going to be tough now that she's leaving at this last moment, when she had a lot of those relationships and was responsible for a lot of those relationships with advertisers. Good for Twitter, but obviously really tough for NBCU, which has had its own sort of internal chaos over the past months as well.
Yeah, with the departure of their leader in recent weeks. It's interesting, the CV, Aisha. We reported in October that when Elon Musk brought in those private investors for X Corp, now X Holdings, he stated in writing the plan to take the company known as Twitter public again in a 3 to 5 year horizon. But you look at Linda Yaccarino, she doesn't have CEO experience. And there are still advertiser concerns, right? I mean, just give us the latest on the advertiser flight and the impact to revenue.
Yeah, so the last time we looked at the numbers here at Bloomberg, right, it was still a large majority of advertisers on Twitter had left. So advertising revenue was down amongst the top 10 advertisers from like 70 million to something like 7 million. So it was a huge, huge decline. And even today, advertisers that I've spoken to are still a little bit concerned about brand safety. So some of you may have noticed on Twitter, there seems to have been almost a rise in misinformation and hate speech. Advertisers are concerned about that. They're concerned about some of Musk's own tweets himself and some of his erratic decision making. And so advertisers still have a lot of concerns about Twitter. And honestly, Twitter was not always necessarily a top advertising destination anyways, just because it's a lot smaller than its competitors like Meta. So there's still going to be a lot of challenges in getting advertisers back and really ensuring them that when they put an advertisement on Twitter, it's not going to appear next to some misinformation or fake news, that it's going to appear next to tweets that are saved and are not going to damage their brand reputation.
All right, Bloomberg's Aisha Counts, thank you so much. Busy 24 hours for you and I both. Now, coming up, we're actually going to turn to artificial intelligence and talk governance with Credo AI CEO and founder Navrina Singh. I want to take a quick look at the S&P 500 as we head to break. We're up 7% on a year-to-date basis, a little softer this Friday. That's about a third of the NASDAQ 100's gain. Some of that is the volatility in banks. Some of it is other sectors that have not performed as well. But how much of the gain year to date has been driven by enthusiasm for artificial intelligence and all those companies jumping in on the bandwagon? We'll discuss. This is Bloomberg. So, Cara, investors poured nearly $4 billion into tech stocks over the course of the week. But Bank of America is splashing cold water on this rally, saying this prolonged period of economic decline in the US will roil technology stocks at a time where they're attracting a weight of investor money. A team led by Michael Harnett expects a recession to crack credit and tech just as it did back in 2008. And there's so many sides to this debate, right? There's those that look at the mega caps and say balance sheet, entrenched market position, look at the activity in the corporate credit sector, the demand for tech is there. Bank of America thinks differently.
Yeah, I mean, whether you see big tech as some sort of haven in downturns or whether you see it as a bet still on growth. And let's just look at the growthier part of this, because the exuberance around a lot of these tech stocks, I think of NVIDIA, I think of some of the chip names, is largely on the back of artificial intelligence, isn't it? And I thought there was a great note from SocGen today, key strategists over there, saying, look, actually, all the main driving force of the equity rally this year on the S&P is all artificial intelligence. They say strip away that sort of euphoria around certain AI stocks, and actually the S&P would be in the red for this year. I'm loving this from Manish Kabra. It was really interesting. He's writing over in London, but they really cite the 96% increase in NVIDIA overall, but the Alphabet, the Microsofts. What would happen if we sort of took away some of that exuberance, Ed?
We saw it in the private markets first. Think back weeks, months ago, all the money going to AI startups. And then the last 3 weeks, what happened? Earnings season. And this is what I've been looking at on the Bloomberg terminal, which is a fantastic chart that Terrell, our charts chief, and I have been passing over. So go back all the way to 2015. And this is a basket of around 20 of the biggest technology names across the S&P 500 and NASDAQ 100. Like nada, zero mentions of the phrase artificial intelligence or AI. Fast forward to the first quarter of 2023, and across the earnings call transcript, that's what we've analyzed, more than 200 mentions just for that basket of 20 companies. That's a massive ramp up in activity. It's been gaining, but look, first quarter of 2023, this is the here and now. AI is everything for corporate America.
It is, but with that exuberance comes, for many, a healthy dose of caution, a healthy dose of how do you inject artificial intelligence into your business model in a safe way. We're going to have that exact conversation right now, Ed, because Navrina Singh's with us. Credo AI, founder, CEO. Credo AI is actually a responsible artificial intelligence governance platform. Basically, you are empowering organizations to what? Deliver, to embed AI, but do it responsibly, do it proactively, monitor it, manage it. And I'm interested, Navrina, how many companies you think are actually holding back on interjecting generative AI because they are worried about some of the risks that are involved?
Thank you so much for having me. And what a critical topic right now. Caroline, we are seeing across the industry right now, generative AI already reinventing businesses. The top of mind questions for many of our customers is, how can they continue innovating responsibly or get crushed by this generative AI wave? So right now, the top of mind question that we are hearing across our customers and partners is, how can I adopt generative AI confidently and responsibly to make sure that the risks like copyright, IP leakage, plagiarism, etc., are under check?
Your background is fascinating because you're building this way of monitoring and doing it responsibly. You used to be a director of product over at Microsoft, thinking about the ways in which AI can be commercialized. Is corporate America at this moment being thoughtful enough? Is VC, private money, being thoughtful enough about the guardrails that need to go in place at the same time as the exuberance around just the innovation?
Caroline, there is some momentum, but it needs to be more. As you can imagine now, it's not about just winning with AI. It is also about how you win with AI. And this is where we are going to start seeing a lot of differentiation among organizations that actually emerge as leaders in this age of AI, where there is investment in AI governance, where there is investment in oversight, where there is investment in not only understanding AI risks, but managing them at scale, while also keeping an eye out to future regulation. That's where we are going to see the wins emerging in this ecosystem. So AI governance is certainly underfunded and certainly, becoming top of mind, but we need to see more progress and momentum in this space.
Navrina, good morning to you. Government compliance, doing business with the public sector. What level of government compliance does Credo have? Are you able to offer your services to the federal government, as an example?
Absolutely, Ed. So recently we announced a very strong partnership with Booz Allen with exactly that focus. As you can imagine, there's been an emerging discussion in White House around how do you, make sure that frameworks like Bill of Rights are implemented appropriately across U.S. agencies so that we are always keeping, U.S. citizens' rights central to this conversation. So Credo AI right now is working across United States government, as well as with partners like Booz Allen, so that we can bring AI governance as a mechanism for them to accelerate AI adoption, but do so, again, safely and responsibly.
Navrina, there's a debate within the artificial intelligence community, AI native or AI adjacent startup founders basically looking at regulation and saying, well, if we think about healthcare or education, those are highly regulated industries where the consumer faces high prices or there are still risks in place. What is the benefit of focusing on a commercial guardrail versus seeking comprehensive regulation?
Yeah, Ed, I think this is where we have to really strike a right balance between innovation and regulation that supports that innovation. And, there's global initiatives that I'm actually actively involved in, Credo AI is involved in, again, to make sure that AI governance and oversight across the entire value chain, from design, development, to procurement and use of AI systems happen. And so, this is an opportunity for us to really bring in private and public sector together to ensure that policy goes hand in hand with innovation so that it can become an accelerant rather than a deterrent to this AI innovation.
Navrina Singh, Credo AI CEO, thank you for your time. Now, sticking with AI, the music industry's biggest threat now is AI-generated songs that are going viral. Industry executives, most notably Spotify CEO Daniel Ek, have been quick to promise heightened vigilance on behalf of labels, artists and copyright holders. But while the platforms are sizing up the new disruptive force, labels and managers say that fraud is already rampant. User-generated content and bogus tracks may now account for 10% of all streams, Karen.
Amazing, those statistics. Meanwhile, let's shift gears a little bit, Ed. We're going to go to a bit of an old school in the world of technology. We're going to Squarespace with the man who built it 20 years ago, the CEO. How is this website still such a prominent building platform? How is it developing tools necessary to serve small businesses? And let's face it, we'll ask a question about AI or two, I'm sure. That's next. This is Bloomberg.
Squarespace, known for its suite of services in website building, domains and marketing tools, is reaffirming its mission to serve small businesses and creatives after 20 years of operations. We welcome its founder and CEO, Anthony Casalena, to the program. Anthony, good afternoon to you out in New York. Good morning here in San Francisco. You had earnings on Tuesday and you raised full-year guidance for revenue. And I want to get right to it and ask how much of that confidence is driven by the moment we're having in AI?
Yeah, first off, thank you for having me. And, just a fantastic quarter for us. We were able to beat and raise, maintain our strong cash flow profile and continue to accelerate growth, which is really fantastic. Another point on the quarter is that trial starts, number of people trying our core product was the highest of any quarter, even including pandemic quarters, which were record highs for us. As you mentioned, and as I, spent a lot of time talking about on our earnings call, AI is something that's, we actually know a lot about. Our industry is no stranger to it. I would say two things about it. One is sort of, where Squarespace is right now and where we're going in terms of where we take things with AI. So Squarespace stopped the need for a lot of people who use our platform for programming websites about 2 decades ago. So that's not something we are planning on necessarily using AI for at this time. Once you get set up with Squarespace, we do a lot more than just generate a website. We host it, deal with bandwidth, cybersecurity, DDoS protection, DNS, SSL certificates, domain registration, just a myriad of things that you need after you have designed the website. And we do that for $16 a month as a starting point. So, that stuff is as relevant as ever for our customers.
Yeah.
I'll say 2 things about how we've been incorporating AI and large language models today and where we're going to be incorporating them in the future. So one of the main reasons why people have trouble starting with Squarespace is they say their content is not ready. They don't have the images they need for their site. They don't know how to write an about page. They don't have their copyright. So actually this past Monday, right before earnings, we introduced GPT-based large language model content generation in all of our text fields. And we launched that in beta to our Circle community. So we're super excited about that. The other
Anthony,
place I'm super excited.
did that moment that you announced that you were integrating with OpenAI, did that clearly make a lift in? Did your people start to turn to you and say, this is exciting, this is going to change the dial, or were they just like, yes, obviously?
I think it was more of yes, obviously. We've been aware of these models for months. I mean, AI has been part of setup in our industry for, I believe, about 8 years. So we've been looking at it extensively, which kind of brings me to the second place where we're incorporating AI. In Q1, we launched something called Squarespace Blueprint, which lets people get started building a template and bypassing our template store. That's a perfect spot for us to integrate essentially prompt engineering on top of a large language model. You can tell us more about what you want, and we can generate those sections for you so that you don't have to be picking a full template out at once. So perfect places where we expect to see a lot of AI tailwinds.
It's interesting, isn't it, Ed, at the moment that poor people come on to want to talk about their general earnings and we go straight for the AI focus. But a lot of this is about how on earth, Ed, I think people are going to be coding in the future. People are going to be building in the future.
Anthony, I have to ask you, on self-reflection, how much you feel an existential threat. The debate that I hear daily is, do we even need computer scientists anymore? Do we need coding? I know that you explained that you've taken that process away 20 years ago. But you look at the demos from Google on Wednesday, I was there. Look at what OpenAI demonstrates. Anyone can request code and do anything with the code generated. So what's the point in Squarespace?
Oh, I mean, the point in Squarespace is the list of things I rattled off that after you have the code. After you have the code, you have to host it, provide bandwidth, storage, get a content delivery network on there, prevent against DDoS attacks, get DNS running, get your domain running. Squarespace does all that for $16 a month. If you were to also then not pretend, but believe that all of our all the programmers in the world are suddenly going to be out of jobs, which I certainly don't believe, then it would be very interesting because then we would be modeling our company at something like a 70% free cash flow after we can run it without employees or something. That's nothing we believe in. We have a fantastic creative and engineering team, and we're building that team, not thinking about a world where they don't exist. Further, in other areas like customer support, we've had AI-based chatbots implemented for over 5 years. We monitored deflection rates. Those are only getting better with GPT models. So we anticipate really a lot of tailwinds from these technologies being incorporated in Squarespace in the content generation and the setup process. And we think it doesn't really detract much at all from the infrastructure we provide.
Anthony, great to have you. Thanks for talking us through it all. Anthony Casalena there, he's CEO and founder of Squarespace. From New York, from San Francisco, this is Bloomberg.
Welcome back to Bloomberg Technology. I'm Ed Ludlow in San Francisco.
I'm Caroline Hyde in New York. Let's get to these markets today, Ed, because it's an interesting one. As we just see a little bit of caution as we go into the weekend, we have the macro data looking a little ugly. If you look at the inflationary pressures, the perspective of the consumer, the UMISH data, we're down by 0.7% now. So tech takes a hit when we've got inflation front and center because we think the Fed's going to have to hike. 2-year yield up 8 basis points in the back of that. Bitcoin actually having a bit of an ugly week and indeed down some 2% on the day. It's down more than 10%, well, 9% over the course of the trading week. That's because of the strength in the US dollar, as well as worries perhaps a little bit about the illiquidity out there and some of the regulatory risk. Let's flick it on and look at how individual stocks are doing on the day, because Google, I have to say, you were there on Wednesday, Google I.O. This has really lit the fire beneath some of Google's stock of late, and we're seeing Alphabet shares up 0.7%, and one of the biggest contributors to the points on the upside, at least for some of the benchmarks today. We're seeing it up, 10% over the course of the week? Best week since the end of March. First Solar, interesting, buying a company in Europe. You don't often see a company really shoot higher when it's spending some money, but it seems to be really net additive to the overall business offering. We're up 23% on First Solar, and I'm looking at Comcast, down by 0.3%. Of course, the owner of NBC Universal, which today, we understand, Ed, is having to say farewell to their ad chief of NBC. And we know where they're going. Twitter, we'll talk about that in a minute.
We will. Those are your tech markets. These are your tech headlines in Talking Tech. First up, VinFast, the EV maker founded by Vietnam's richest person, going public via SPAC in what would be the largest ever US listing by a company from Southeast Asia. The deal will give VinFast an equity value of about $23 billion. Sticking with EVs, Tesla facing issues in China. The EV maker will need to fix almost every car it's ever sold there due to a braking and acceleration defect. It's actually on the regenerative braking. It could increase the risk of a crash, according to the regulator there, impacting about 1.1 million vehicles. But it is a software over-the-air update that we should point out. And back in the US, Tesla has tweaked prices of its vehicles for the third time in less than a month, adding $1,000 to the prices of its Model X and Model S. The base Model S now costs a little more than $88,000, still about $16,000 less than it was at the start of the year. Karen.
Yeah, and we've got to stick with sort of the Tesla theme, or at least its leader, because Tesla's shares have been battered around a little bit today because, well, maybe its focus of Elon Musk is going to turn his attention back to it. Why? Because maybe he can take his foot off the gas a little bit when it comes to leading Twitter, of course. Let's talk about all of this when we're thinking about the leadership at Twitter who's coming in with Claire Diaz-Ortiz. She's, of course, taking the focus on the change of leadership and the future of the social media giant. And you're now, of course, Kleiner Perkins, VC scout, former Twitter executive. What are you making of the fact that ultimately Twitter's had to realize that Elon Musk is great on the tech side of things, but they need someone who gets the advertising side of things?
I think it's so interesting. I think, Elon Musk may be a genius, but we all make mistakes, including Elon. And it's just very interesting to see sort of 6 months into this journey, his realization that advertising, which made up 90% of Twitter's business, really does matter. And keeping those advertisers happy and close is really important. And so this move is just absolutely a step in that direction, a step in hopefully a positive direction to turn around Twitter as a business and bring back advertisers to the platform.
Claire, Linda Yaccarino, what's your reaction to her as a CEO at Twitter?
I think it's super interesting. I am interested to see how this goes forward. She and Elon gave a presentation last month at a summit in which she seemed to really have a handle on his personality. And, she was even encouraging him, advertising is important. Elon, why don't you get off the Twitter at 3 a.m.? So I think there's hope here that she will be able to bring some heft and some leadership to the company, which it really needs. I mean, as I said, the revenues have just plummeted. We know that, advertising revenue used to make up 90% of Twitter's business. And we know that advertising revenue is down about 60% now. And what Twitter really needs is a leader who can come in and court those global advertisers to come back to the platform.
You were at Twitter 2009 to 2014, corporate social innovation. At one point, I think somebody called you the woman who got the Pope onto Twitter. What will they be calling Linda Yaccarino? What kind of impact beyond just ad sales do you think she can do to help the platform?
I think the potential here is pretty incredible. The first thing she's going to have to do is get back and court all those advertisers again, people she's worked with very closely over her long career at NBC Universal. And what she's going to have to convince them is that stability and security are back. And that's, of course, why advertisers left the platform. Their concerns about stability and their concerns about security, the rise of hate speech, the reintroduction of a bunch of formerly banned accounts. And so that's going to be her first sort of step, is to make sure advertisers feel safe and feel excited to use the platform again. And then beyond that, I think one of her biggest challenges is going to be looking at how she can accomplish all this with a really reduced headcount. We know that at NBC right now, she leads a team of about 2,000, which is about the size of Twitter as it is right now. But, Twitter is made up of a ton of engineers, and she's going to require a media team and the need to sort of build that back up again. And that's going to be really interesting to see how she's able to do that on such limited staff numbers.
Claire, you point out the challenges here. And ultimately, the way in which this has been announced, dare I say, it's a complete mess. It is not how I would want to be taking on a new role, to have to exit like that, to have to enter like that. And many have said, and maybe I'm just seeing it more because I'm a woman, but they've said, look, this is the so-called sort of glass cliff. This is once again a diverse leader being handed a bit of a poison chalice here.
It's super fascinating. So there's a study from some researchers at the University of Essex, and that's been sort of going viral on Twitter because it was republished in Harvard Business Review. And essentially it shows that in times of crisis in a business, generally the markets prefer a leader who has stereotypically feminine or qualities of a woman, essentially. And yet when a business is sort of doing well, we tend to prefer the stereotypical qualities of a man. So it's not a surprise that in a extreme moment of necessary turnaround that Twitter requires right now, that they're going out and seeking a female leader. What we can hope is that she can turn this around and it won't just be sort of a failed experiment, right?
And it's interesting, of course, that Elon Musk is going to the CTO role. So it feels as though the delineation is clear. He's very much going to be about innovation on the platform. She's going to be about how you sell it and bring safety back. Is that the way? Do you think that's a good alliance, a good way of splitting it?
I think that's a good analysis, but I think I would highlight here that, you know, this is a huge thing for him to acknowledge, right? I mean, the CEO is, for all intents and purposes, in a management role in charge of the CTO. And this is very different than the tune he was singing 6 months ago when he bought the platform, right? That we're going to create a super app, that we're going to have payments, that we're going to do all these really exciting things that are going to require tons of innovation on the side of tech. And now he's saying, hey, you know, actually, we need a CEO who really knows advertising, who really knows numbers, who really knows the business side of things. So I think it's a really fascinating turnaround, and I can't wait to see what happens.
I would also point out that he's going to the executive chair role. So he's kind of giving himself that position of oversight alongside CTO. It's interesting. I don't think Jack Dorsey was CEO when you were there. You were there 2009 to 2014. And Jack Dorsey was technically CEO from 2015. But Jack was also criticized for sort of having this non-CEO persona. He was not a pencil-pushing executive. How did that dynamic work at the company? You know, how important is it to have somebody that's more technologically focused driving their platform like Twitter forward?
Well, typically in Silicon Valley, that's incredibly important, right? From the perception of how you're hiring the most incredible staff and how you're, you know, raising venture dollars, obviously not relevant right now to Elon. That's super, super important. And so to be one of the largest tech companies out there and to have a CEO who is not technical is very interesting. And again, I go back to why I think this is such an admission on the part of Elon that some of his experiments really didn't work, and didn't work to such an extent that they've got to change things up dramatically here. I think with this change, you're going to see a lot of going back to the way Twitter used to be. And that may be really challenging for Elon, and he may really not like a lot of it. So, I mean, there's a lot to kind of wade through here.
I just want to go back to some of the reporting we talked about earlier in the show, which is that we reported in October when Elon brought back brought on private investors to the new entity, he was telling them that plan is to take this entity public again in a 3 to 5 year time horizon. So I find that interesting. I also find like what Twitter is interesting, Caro. Yeah. Tucker Carlson, the most recent example. So what? We're going to have news shows based on Twitter now.
Well, and that's what's so interesting. You'll hear a lot of news executives sort of always wanting to know when it's going to work in tandem with social media. And Claire, to that point, is that still an area that you're interested in, the fact that Tucker Carlson's going to go and build something almost bespoke for Twitter? It's about, that seems to be more about the subscription side of things, because he's not a man that actually really managed to tantalize that many advertisers.
I don't think he is a man that tantalizes many advertisers. I think that's accurate to say. Yes, and then again, we're getting back to subscription side. So clearly Elon is not giving up his dreams of, you know, charging users to use the platform and have that to be a really big business. But he is acknowledging that, hey, 90% of revenue came directly from advertisers, and we need to at least get back a little bit to the way things used to be in order to keep Twitter more or less on an even keel. Although I don't think anyone could ever say Twitter is on an even keel right now.
Well said. Kleiner Perkins, VC Scout, former Twitter executive. Claire Diaz-Ortiz, it's great to have some time with you over there in Argentina. Ed.
Yeah, I enjoyed that one. We covered a lot of ground. They're coming up. AI's impact on customer service. We're going to discuss all that and more with NICE CEO Barak Eilam next. This is Bloomberg.
And what we're seeing today is a lot of AI tourists pretending to be AI natives. There's a lot of companies who are not selling solutions, they're ultimately just selling vaporware.
Alex Wang, talking tough there, the CEO of Scale AI, when he calls AI tourists. Let's talk more about the rise of generative AI at this moment and some of the players that have been in the AI space more broadly for more than a hot second, like NICE, a tech company that has been powering customer services for 85% of the Fortune 100 companies with artificial intelligence. NICE CEO Barak Elam is with us now. Barak, it's interesting. You have 25,000 organizations, more than 150 countries. This is about customer experience and the use of AI. But how have you been folding generative AI into that offering?
So, if you think about our space, we cater to thousands of organizations around the world that are serving consumers. And we operate in the space of customer service. And we are that platform of organization when it comes to provide service to customers. What AI brings to the customer service era, if you would like, or the customer service domain, is a true game changer. Because this industry has been struggling with three very important things. First is the lack of skilled labor, the ability to take decisions in a very fast velocity, and mass personalization at scale.
Yes.
And that's exactly what AI can do to this industry. However, there is nothing generic, if you would like, about what those organizations need when it comes to AI, and this is exactly where we are and our company come into the picture.
You're seeing growth, of course, posting 25% in the cloud revenue part of the business growth. But are you worried about some of the competitors that are coming on the space? If everyone suddenly starts being an AI specialist, if everyone can suddenly start changing up a business. I mean, I think this week alone, we've had IBM, what's next? We've had Slack's owner, Salesforce, talking about how they're having the GPT within some parts of their business. Everyone's now offering this to their customers.
I would say on the contrary. First of all, we reported our earnings yesterday, and as you said, we had outstanding earnings with 25% growth in the cloud, driven by both cloud and AI. But when it comes to AI, although we all experienced so far, almost all of us experienced the beauty of generative AI, when it comes to deploying it in customer service for organization, there is nothing generic about it. Actually, we see with our customers, they are divided into two camps. Those that says, I will never put it in my customer service environment because it's not secured and I cannot control it. And the other that see the value but are concerned about taking something that generic and try it and it doesn't work. Because what you actually need to treat that AI as one of your employees. And as a brand, you want the AI to serve your brand, your reputation, and meet your business goal. So it needs to be trained with a lot of information.
Yes.
Information of tens of billions of past interactions with customers. And it's a proprietary information that you don't want to provide to the generative AI.
Yeah.
And that's why they come to us, to our platform. We have that data that is extremely, almost impossible to replicate given our history and the breadth of our offering. It's also about having it in a very secured environment. And you have need the domain expertise. So it actually raises, I would say, the barrier of entry when it comes to technology in the space of customer service.
Gosh, Ed, it takes me back to the conversation we had a couple of months ago with Kathy Wood, talking about it all being about the power of your proprietary data. But also, I mean, that isn't to say, though, that still everyone's coining a term or using and referencing AI, no matter what part of the industry or what kind of company you are right now.
You make a really interesting point, both on proprietary data and referencing the term. Barak, I have free time on my hands, so I went through every single one of your earnings transcripts for the last year. 74 mentions of AI in the earnings call 24 hours ago. In the same quarter a year ago, 16 mentions of AI. In the quarter previous, going back to the fourth quarter, 58. How much pressure are you under to talk a big game around AI?
I don't think it's a matter of pressure. I think that we actually see it in our business. This is the type of discussions we have with our customers today. Our business up until several years ago was concentrated more on what we call the contact center. But all of a sudden, with AI, we actually covered the entire journey of the customer. And we spent the last several years deploying and building AI capabilities that are injected and infused in our platform. And it is today one of the two things that are driving our business. A is the shift to the cloud that is still in the early innings in the customer service part, and even earlier than that, is the AI. So actually, we see it as the greatest opportunity we had for NICE, for our company, since I remember, and I've been with the company for 25 years.
Barak, you did beat on the top and bottom line. Just give us some guidance going forward the rest of this year. What does your customer base look like? Is there confidence to spend right now?
So we had a beat both on top line and bottom line, as you've mentioned, and we raised the guidance for the rest of the year. You know, we operate in a space that even in this economy, enterprises understand they still need to differentiate and protect their brand, elevate their brand, and of course provide an outstanding experiences to their customers. So we are a mission critical solution for them, and they actually continue to invest and invest even significantly, and that's why we raised the guidance for the year.
NICE CEO, name of the company, NICE, but nice guy too. NICE CEO Barak Eilam, thank you for your time.
Thank you very much. Thank you very much for having me.
Coming up, who wants to fund ARM's IPO? That's what SoftBank's trying to figure out as it tests investor appetite for the semiconductor company. We'll have the details. This is Bloomberg.
Let's just talk about the founder of SoftBank Group, Masayoshi Son. He's now personally on the hook for about $5.2 billion on side deals he set up at the company. That's after the company's Vision Fund, venture capital arm, ended the fiscal year with a record $32 billion loss. It's the world's largest technology investor. He's been battered by losses of unlisted startups in his portfolio. However, there is one company that he's looking to list again. Let's think about how much SoftBank is currently measuring investor interest in an IPO of its chipmaker ARM. Liana Baker, Bloomberg News US Deals Managing Editor, is here with the details. Of course, a company that they took private, now they want to take public. And what is the interest like for it?
So it's funny that you mentioned that they were facing losses of $32 billion, because that's almost what they spent on ARM back in 2016. And now it's time to cash out. You might remember that ARM tried to sell to NVIDIA a few years ago. That deal never happened. So this is really a chance for SoftBank to recoup some losses for the rest of their portfolio. And ARM right now could be worth anywhere from $30 billion to $70 billion. Since it's still early, we don't know where the valuation will come in. What we do know is that this IPO is likely going to be the biggest of the year, certainly the biggest in the tech space.
It's interesting. I remember when we went through the Rivian IPO process in November 2021, which seems like a lifetime ago now. But you get big institutionals buying blocks of shares. Like there was demand. Do we have any guide of how interested those institutionals are for this one?
So these are test the water meetings is what they're called. So these aren't, a formal road show. We're going to see those closer to after Labor Day when this IPO is looking to launch. So now these meetings are very early. They're just trying to get an indication of where we could see that valuation come in. I mentioned it's a huge range right now. So probably in the next few weeks, ARM will have some sense of where things are. But again, it is early, and the IPO process has changed in the past 2 years. It used to be that these meetings didn't happen, but IPOs tend to run smoother when you bring in investors early.
Many of those Brits still smarting about the fact it's not going to be listing in London quite as soon as they hope. Bloomberg's Liana Baker, absolutely brilliant. Thank you so much for bringing us that. And interesting, isn't it, Ed, as we talk about just the private valuations around AI, we talk to publicly traded companies thinking about AI, and then we think about companies that totally different, but in the chip designing business that are looking to list. It feels a more buoyant kind of conversation we're having at the moment.
Yeah, like ARM is an AI adjacent company. The chips it designs are at the cutting edge of technology. Will it be a player in AI? There is a school of thought that says yes. Look at the banks, Goldman, JP Morgan, Barclays, according to sources. What did Liana say? A smooth IPO is what we're hoping for?
Well, we've got so much more to discuss. That's the end of this edition of Bloomberg Technology. But what's up next, Ed?
Well, you can check out the podcast or join us on Twitter Spaces right now on Twitter. Do it. This is Bloomberg.